Bob, it's been quite 12 years since the last financial crisis. What do you think banks are going to look like coming out of this in terms of work from home, the services they can provide, et cetera?
So, Alex, we just had our staff meeting this morning, which we try and kick off every Monday during this work-at-home period, using technology. And it's hard to believe we're in our third month now of working remotely. And I think everyone recognizes that we've had, as every other company and every other financial institution, has probably been pleasantly surprised at how efficient they are, how effective they are, but also how challenging it's becoming to not be with our clients, not be with our customers, not be with our team. So I think it's a balance. I think, we will take lessons from this in financial institutions about the ease of technology and how effective it's been in many ways. But I think in many areas of financial services, there is a need for people to be working more closely together, to have those interactions, to be traveling to see the companies they're investing in and the different markets. So I think it's a balance. And I think people are anxious to get some normality back, but have also really learned to work pretty efficiently and effectively when necessary.
What types of financial firms do you think are going to be the strongest coming out of it? I'm thinking about, the shadow banks, the big banks, the regional guys.
So I think there has been a trend, Alex, since the financial crisis, as you said, 12 years ago. Prior to that, then becoming global was very, every financial institution was becoming more global. They were becoming more universal. And I think ever since then, away from the larger interconnected banks, then businesses that are more national and more regional, both in Europe and here in the U.S., and businesses with more focus and selectivity around maybe a specific product or a specific technology have become a lot more nimble, a lot more agile. And we have certainly seen in the case of Kepler Cheuvreux, which is our European equity sales, trading, and research business, that kind of focus during a period like this has been enormously helpful. So I think we're going to continue to see a trend away from global, universal, to more regional, more national from a geographic point of view. But those businesses and financial services that will become global are going to be much more around specific products or specific technology, we think.
That's interesting. So does that wind up leading in the end, say, to consolidation as, say, the bigger guys want to eat up those pockets of innovation that are happening within the sector? Or how do you see that evolving?
Well, it's different in different areas. In the largest insurance and banks, for example, since the financial crisis, the capital rules have been very, very clear. Much higher levels of equity are necessary. And we've seen little consolidation amongst the largest institutions. I think what we've seen in this market dislocation as well is those larger financial institutions have become more interconnected with the government. Or maybe it's better to say public policy than government in terms of executing on loan guarantees, capital levels going up and down depending on specific public policy. And that probably won't change, but I think below that, the ability to be, as I said earlier, very focused and very selective on specific products or specific technologies will continue. I think we'll also continue to see in the larger institutions in the insurance area the need to raise more and more equity when there's a market dislocation like this can happen either by going to the markets to raise equity or by exiting pockets of risk. And we've certainly seen in our insurance platforms within Atlas Merchant Capital significant opportunities where some of the larger insurers are exiting, particularly when there's closed businesses and closed pockets of risk, that they're exiting those, and we're able to take those on our platform.